Hi, today we are going to talk about two new tax measures introduced by the French Finance Bill for 2018, aiming to make the Paris financial center more attractive in this Brexit context, and more specifically about abolition of expansion of scope of financial transactions tax and abolition of top payroll tax bracket. Let's first remind briefly the context in which new tax measures have been adopted. On the 23rd of June 2016, the United Kingdom voted in a referendum to withdraw from the European Union. On the 29th of March 2017, the UK government invoked Article 50 of the Treaty on the European Union, which gives any European Union member state the right to quit the European Union and outlines the procedure for doing so. It gives the leaving country 2 years to negotiate an exit deal. The UK is thus due to leave the European Union on 29th of March 2019. One of the most important consequences of Brexit is that the UK financial service providers lose their financial services passport, which enables firms that are authorized in any European Union state to trade freely in any other with minimal additional authorization. For a reminder, the European Union passporting system enables the European Union-based banks and financial services firms to sell products and services across European Union borders on the same basis as if they were present in the market of sale according to the principle of freedom to provide services, or to establish network of branches in financial centers across the European Union according to the principle of freedom of establishment. However, once the UK has left the European Union, it would become a third country for the purposes of the European Union financial regulation, and the UK-based firms would further not be able to rely on their passporting rights under the European Union financial service legislation. Opportunities linked to the withdrawal of the major financial center of the world from the European Union can be found in establishing a financial center on the European mainland. Thus, many financial firms are looking to open up operation in the Eurozone ahead of Brexit to ensure smooth operations regardless of the outcome of the Brexit negotiations. In this context, the French legislator has set out a raft of tax measures to make the Paris financial centre more attractive for the firms who may have to leave London when the UK leaves the European Union. Among these measures are abolition of expansion of scope of financial transaction tax and abolition of top payroll tax bracket. A financial transaction tax has been introduced by the Article 5 of the Post-Amended Finance Bill of March 14, 2012. This tax has been codified by Article 2035 ter ZDBs of the French Tax Code. The financial transaction tax is levied on the acquisition for consideration of an equity security or a similar instrument when such security or instrument is traded on a regulated or recognized market. The acquisition results in a transfer of ownership and the security or instrument is issued by a French-listed company with market capitalization exceeding 1 billion euros on the 1st of December of the year preceding the taxation. The tax is based on the acquisition value of the securities as expressed in the contract, resulting in the transfer of ownership to the buyer. Its rate is 0.3% as from the 1st of January 2017. The financial transaction tax has three components: a tax on purchases of equity securities or similar instruments, a tax on cancelled high-frequency trading orders, a tax on purchases credit default swaps of a state. This tax only applies to transactions that result in an effective transfer of ownership, and so it doesn't cover purchases and sales carried out within the same day. The intraday transactions are the acquisition of a security that are not materialized by a book entry to the extent that they are preceded or followed by sales of the same security in the course of same day. Article 62 of the Finance Bill for 2017 expanded the base of the financial transaction tax to intraday transactions. The effective date of the extension was postponed to 2018. The postponement of the entry into force of this new provision by 1 year was explained by the technical difficulties that the tax administration would need to overcome for the concrete implementation of the scheme. Article 39 of the Finance Bill for 2018 provides that the extension of the scope of the financial transaction tax would be abolished before the change becomes effective. Consequently, the application of the financial transaction tax shall not be extended to intraday transactions with respect to acquisition realized as from the 1st of January 2018. Under Article 231 of the French Tax Code, a payroll tax applies to corporations that are not subject to value-added tax or where at least 90% of an entity's annual turnover was exempt from value-added tax in the previous year. The tax is assessed on the gross salaries of employees at the following rates. Under the Article 90 of the Financial Bill for 2018, the top payroll tax bracket, 20% rate, is abolished for salaries paid as from the 1st of January 2018. Thus, the portion of salaries above €152,279 would be subject to the 13.60% rate instead of a rate of 20%. As to the abolition of expansion of scope of financial transactions tax, this measure is aimed at reducing the costs of financial transactions and enhancing the attractiveness of the Paris financial center. As to the abolition of top payroll tax bracket, this measure is aimed at reducing the cost differentials of highly qualified labor in the financial sector versus comparable European economies and attracting foreign financial institutions in France.